The markets are so slow. Yeah, I'm excited though. I'm excited because this is not new for me, but I get excited to experience different things in the market because it allows me. I think of it as like a test of my trading. Right? Does anybody see it that way, or are you guys just like, man, this is dumb? I see it as like a test of my trading, right? So when I first started trading, right? Again, I assumed I'm a young trader. I assumed everything works the same way forever, right? So I'm trading the markets, and I first got started trading where it's high volatility markets, very directional for the most part, and they're big ATR, lots of movement, right? So an average trade on like the hourly time frame was like a 50 pip target. Crazy, right? Like 50 pip target, like big ATRs. And things were really, 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 really good. And when you start off like that, you assume that, keep in mind, I'm coming from a position where I struggled for years and years and years, and then things got good. And you're like, man, I finally got it. This is what good trading feels like. Things are going to be great. And you assume those market conditions are going to stay the same because why wouldn't they? Right? Why would market conditions change? Right? Of course they're going to stay the same. And you get to the point where you have different market conditions, and it really tests you. It tests you as a trader, as a person, your discipline, your commitment. Right? No different than like how a drawdown tests you, but it also tests your strategy. Can your trading style withstand different market conditions? Right? And coming from someone where one of the first strategies I traded was a trend continuation strategy. Right? And you can guess, right? What type of markets do trend continuation strategies work best in? Trending markets, right? So when the markets are trending, you're killing it. But can you survive when the market's in consolidation? And that's an issue for many traders, right? You can imagine many traders never do back testing, right? I spoke to a trader this morning on the Facebook, and it was in a trading group on Facebook by a good friend of mine, Steve Burns. Many of you guys know him. And he was talking about, it was, I forgot the question, but it had to do with target taking. And we got into a conversation about, he was essentially saying that, I think I made the comment, I'm like, so many traders are good at identifying trading opportunities, but they struggle with placing smart targets and smart stops. I think the question really talked about traders, like, is smart stop placement a logical part of risk management, something like that. And the trader responded where he's like, yeah, I'm good at finding trades, good at catching the trend, I'm good at stop losses, but I struggle with targets. And it's obviously this trader has never back tested. There was no rule on how to take targets. I went in, I'm like, well, what are your rules on taking targets? And he's like, yeah, I trade trends. And I was like, that's a cop-out answer. That doesn't answer the question. That's something to buy time. And the trader had no rule on taking targets. If you have no rule on taking targets, it's obvious that you did not do what? Back test, right? So if you didn't back test, how do you know if what you're doing works throughout different market conditions? You don't. And that's why so many traders get on this hot roll when the market is moving directionally and they get all excited. And then the market goes back to kind of normal Forex style, 70% consolidation, and they get beat to death in the chop, right? Beat to death in the chop. If you're a trend trader, you know exactly what I'm talking about. That chop is the worst. It is losing trade after losing trade after losing trade. And every time you go long, the market goes short. Every time you go short, the market goes long, and you just can't get right. And then by the time it breaks out, right, you probably quit on your system, and now you see the big directional move, and you're like, oh no, I would have traded that. Oh, and then you decide to start trading your system again because now the markets are trending. And by the time you start your system again, it goes back into the chop, and you get beat to death again. It's the weirdest thing. It's I like to put a story to everything. I imagine like someone walking into an arena, and they walk into an arena with a bunch of professional wrestlers or professional beat to deathers, right? And you go in there and you get beat to death. And then you give up and you walk out. And then for some reason you decide to go back in and you get beat to death again. And it's like, it's the weirdest thing, but people will do that until they ultimately blow an account. But they have no idea how their system or strategy works over different market conditions. So being able to experience different market conditions allows me to see that, hey, how does my system work during high volatility times? How does it work during low volatility times? How does it work during periods of consolidation? How does it work during periods of directional movement? And it kind of allows me to spot out my strengths and weaknesses, right? One of the main reasons I started going more to I started adding more trend trading techniques to my trading, right? Because I was counter trend, fully counter trend, right? For the longest period of time. And one of the reasons I started adding more trend continuation type techniques to my basically my toolkit was because I noticed that, guess what? During directional months, periods, I guess you can say, guess what was happening to me? What do you guys think? Yeah, I was walking into that arena and getting beat to death, right? I was getting beat to death, right? Imagine being a counter trend trader when the market is trending. Every extension you get is probably me getting stopped out. So I started asking myself, I'm like, how can I trade something to just kind of hedge this period, just so I can break even? I always tell my story about the month of September. How can I add something just to kind of like tread water, right? Just that, okay, I'm still going to catch some of these losses, right? I'm not going to avoid those losses necessarily. But how can I catch some of these wins as well to kind of balance things out? And I never would have made that adjustment if it weren't dealing with different market conditions. And making that adjustment has allowed me to become the trader I am today, where I have multiple ways to attack the market based on what the market is doing. It's opened up a lot more opportunities for me, and it's helped my equity curve. Now that hedge is a plus and a minus, because when the markets are consolidating, how do you think that trend trading strategy is going to do? Well, that's probably going to get beat to death as well, right? So what it does is, yes, it takes away from my extensions. If you can imagine, if you can visualize my equity curve, it takes away from my extensions. My extensions aren't necessarily as big as they could be. However, on the other hand, you can make the case that my home run trades do come off of my trend trading strategy, so that would make the extensions bigger. But that's every now and then. But essentially, what it does is it limits my gains a little bit. But more importantly, what do you think it limits? What would I say is more important? It limits my losses, right? My pullbacks aren't as steep. And really, in theory, when your pullbacks aren't as steep, your extensions end up being a little bit bigger. And I'm okay with that. And that's why I have a very slow, boring equity curve. You guys have seen it before, right? My equity curve, you would say it's not impressive. It's realistic. It's not impressive. But it is a slow, choppy trend. It slowly turtles its way from the bottom left to the top right, which is what I want to see. But change in market conditions, that's what allowed me to grow as a trader. It also works on my skill of adjusting. And we had that low volatility year where I had to stop trading target ones or target twos. I told you guys last week, we may be going towards something similar this year, right? I'm at the point right now, I just did my March review. I ended March, right? My target twos are not performing to the level that I want to see them perform at. Now, I have to take into account I am in a little bit of a drawdown. I'm in like a sideways drawdown. So your numbers are always going to be kind of weird while you're in a drawdown. I'd like to see how they perform once I get out of that drawdown to get a true tell. That's very important. You can't, when you're in a drawdown, you're losing, right? So obviously things are going to probably look a little bit worse than they are. But I wrote it down as something I need to pay attention to. Hey, my next quarterly review is what, March, April, May, June, right? June, end of June. Let's keep an eye on how these target twos are doing, right? You'd think I'd be out of a drawdown by then. Maybe, maybe not. But we're also heading into the summer, which is historically a slower period in the market. So, it may be something worth keeping an eye on. I may need to make some adjustments with these target twos. Long way out, but it's something I'm starting to think about. Let me get to some of these questions you guys had.